Good afternoon, everybody. This is Jerry Hahn with Exit Realty Elite. Thank you guys for joining me today. This is the beginning of our series with everything realty. Basically, what I'm doing is I'm sitting down with industry professionals, such as my good friend and guest today, Mr. Mark Dean with Service First Mortgage. And basically, we're just going over industry questions that you want to know as a consumer. Um, so as I mentioned, this is Mark Dean. He's with Service First Mortgage. Mark, thanks for being here today, man. Appreciate you taking time to visit with us.
Yeah, thank you. I'm
Everything going?
excited. Thank you for the invite.
Oh, no worries, man. Like I was telling everybody, kind of the backstory, and I mean, we've talked about it before and everything. Just want to run through some questions with you and things like that from an industry standpoint.
Okay.
What I found as a realtor, as I do business, I mean, people are always asking questions about all kinds of things in real estate, whether it's mortgage, title, you name it, they've got questions. And I mean, over the years, I've gathered, some information, but it's always changing. So I thought it would be wise to visit with our industry professionals and get basically the pulse of what's going on now. But first and foremost, I mean, that could be later interviews or whatever. But first and foremost is just talking with you and kind of educating a buyer or seller on how important a lender is and what you guys actually do. So tell us a little bit about you, your company, how long you've been in the business, and who you work with.
Okay. So, like Jerry said, my name is Mark Dean. I am a mortgage banker for Service First Mortgage. I've done this for about the last 3 years straight in our what we classify as our traditional market, secondary market. And I've been in the financial world probably since I was 21 years old. I'm 31 now, so roughly 10 years working within the financial world, primarily on the banking side. Still doing lending, still servicing clients from things from auto loans, boat loans, commercial deals, smaller commercial deals, interim construction to build a new home, and your, home equity, HELOC, mortgage purchase, pretty much everything related to lending when it comes from a consumer standpoint. But moved here to Fort Worth about 6 years ago. I live in the South Fort Worth area. Love everything about it. Love the community, but primarily work and service in Johnson County, which I plan to move to here shortly in the future. But right now, just living life, killing it in the mortgage world, and just loving everything about it.
Okay. So let me ask you a quick question. What you mentioned traditional, secondary, kind of explain to our viewers what that might mean.
Yeah, so there's a few differences when it comes to mortgage products or just residential loan products. You have, in a nutshell, three sources of this. You have your bank portfolio lending. Those are loans you would go to a bank, they would originate it and fund it all inside the bank, meaning they're not going to sell it off to the secondary market. They're not going to sell it off to the government. Primarily, they will keep them in the bank from the start until the finish, until that loan is paid off in full. It remains within the banking guidelines.
Okay.
Then you have the market I'm sitting within, which I classify as kind of our traditional mortgage market, where when we originate loans, we may end up selling them off either to the federal government or to our investors we work with, and they service our loans. And then you also have a third platform, which is your hard money lending. Hard money lending, it honestly is not for everyone, but it's there to primarily help most real estate investors purchase a house to either maybe do renovations on, purchase it to do a rental property down the road, or get short-term financing to grab the house and bring it into their portfolio. But those are your three primary platforms when it comes to residential loan products.
Okay. What about the process for getting a loan? If someone's going to come to you, and obviously if I've got a buyer, I'm going to ask if they're pre-approved, pre-qualified, things like that. Kind of explain what pre-qualified, pre-approval means and that process to walk someone through that.
Yes, so the process with me is different case by case. I will move as fast or slow as any of my borrowers or clients want me to move. But first and foremost is just understanding their financial picture and what they are trying to do currently. What is best for them and their family? So one thing a lot of people will think about is, okay, well, I need to get pre-qualified or pre-approved. What is it the realtor is looking for? Either one of those is perfect, but they are also slightly different in terms. Pre-qualified means we have analyzed some of your information. We may have looked at your credit report. We haven't seen your pay stubs or your tax returns or anything like that. But we feel comfortable enough knowing that, hey, we can get you pre-qualified based off of the information you currently have given me. Now, pre-approval means we have looked at the hard evidence of what you earn per month, meaning we have some of your pay stubs in file. We might have a verification of employment in file, your tax returns, bank statements, and we've analyzed them and said, okay, we see everything you've input into our application, and it all lines up with your documents you've provided with us. So at that point, our underwriters might say, okay, we have conditionally approved this loan, therefore being pre-approved to purchase a house.
Okay. All right. And obviously that's different for everybody based on their scenario and their circumstances and everything like that. And you take all that into consideration. And, you know, I got a lot of people that says, well, I don't think I can buy a house right now. My credit is not great. And that obviously that means a lot for a lot of different people. So explain what, I don't know. I don't know if I'd say ideal buyer or ideal credit would be, but kind of dispel a few rumors about, what a credit score needs to be to go ahead and purchase a home at a good interest rate. Obviously, that's going to affect the interest rate.
Okay.
But, just a little story about that.
Yeah, so the majority of the time, and I would say about 30% of the people I talk to make that exact comment you just made. Mark, I know I'm talking to you, I'm gathering more information, but I just don't think I fit the qualification to purchase a home. Right. First thing that always comes to mind is, you know, you'll never know unless you try. And the only way to try is to submit an application over to us, and let's have a conversation on where you currently stand versus where you want to get. Typically, we can go down to a 580 credit score, and not everyone is the same. Just because your score is a bit lower doesn't necessarily mean you have bad credit. It just means there might be some mitigants there driving your score lower than other people's score. The fantastic opportunity we have with Service First is even if you don't qualify, it's not a discourageable moment, meaning I'm not going to discourage you and say, hey, Jerry, unfortunately, you don't qualify now. See you later. I'll talk to you in 6 months. That's not how I do business. What you would get with me is you would hey, Jerry, unfortunately, you don't qualify now. Here's why you don't qualify. Here's what we need to do to get you to qualify. And so we have systems in place. We also have a bunch of knowledge base, meaning upper management have done this for 30, 40, some of them 50 plus years. But we have a bunch of leverage we can utilize to really guarantee or make sure that we can get you in the route of financial success and potentially get you into a home later on. We have ways of looking at your credit report in depth and doing certain things to your credit report, maybe paying down revolving debt, maybe paying off loans, maybe clearing or fixing up your collection or charge-off accounts, which will allow your credit score to start trending upwards as opposed to downwards. And so it's different case by case. If you were to take just a splitting image of a neighborhood and put a credit score on top of each house that you see purchased in this neighborhood, you'll realize real fast that, you know, your next door neighbor may have a 580 credit score. The neighbor next to them might have an 800 credit score. The neighbor next to them might have a 650 credit score. And so in reality, your score, yes, does contribute to your interest rate, but is not your definitive decider on whether you would be approved or declined for a loan.
Okay. And what would that, I know there's different ones, but what would be an example of a definitive qualifier?
You know, we typically look for 580 plus credit customers. We want to see tenure in a job, meaning over the last 2 years, you haven't jumped from job to job to job, meaning you don't have 10 or 15 forms of employment over the last 2 years. We want to see somebody with 1 or 2. And if you jump, it's not the end of the world, but there's a lot of mitigants when it comes to employment. Are you currently renting, or do you own a home, or are you maybe living at your family's home, saving money while the time be? And then we also look at pretty much everything top to bottom, from the credit score to what you're currently paying now as far as rental prices go, to where you're trying to get. And so there's certain ratios we have to abide by, which will really truly tell us how much you qualify when it comes to home size or sales price. How much home can you theoretically afford, alongside what makes you most comfortable? Because a lot of people in my world, I will get them pre-qualified and mention, hey, you qualify for $300,000. But lo and behold, the $300,000 mortgage may come with a payment structure that doesn't quite fit your monthly desire, meaning you may want a lower payment. And so we look at it from top to bottom. Once we know for sure we can pre-qualify you, then that ignites us to get on the phone, talk with the client, and really go over it from top to bottom. Here's what you qualify for. Here's the payment. Now let's talk what's most comfortable and best for you and your family. Where do you want to be from this point on?
Oh yeah, and that's important. I mean, from somebody like, being in my position, talking to a buyer and everything like that, it's like, what do you qualify for? That's not always a determining factor. I mean, you can go, yeah, I mean, you could have qualified for a $500,000 loan, but your comfortability, you're like, well, I want my payments to be X amount. Well, obviously that's going to determine the price of the home and everything like that based on what you're going to do and all. But it's good to know that from a lending standpoint, you guys do say, just because you can may not mean that you should.
Yes, sir.
So,
It's one of those tasks that, you tell a lot of people, hey, you qualify for 400,000.
great.
Light bulb's going to go off up here. They're going to get super excited and want to go do what? Look at $400,000 houses. And so that's why it's important to me to really educate these clients and make sure they understand that, to your point, although you qualify for that $400,000 house, it may not be best from a financial standpoint for you to do that right now. Might be beneficial 2 or 3 years from now, but let's get you into this first home and see where it goes and see how you manage it.
Right, because there are people that just because they can qualify for something like that doesn't mean they want to go out and spend that amount. They may be
Yes, sir.
comfortable with a smaller home, an older neighborhood that may be, established or whatever the case may be, and they just want to go low key and obviously, keep a lot more of their income in their pocket as opposed to going, well, I don't need a $400,000 home. I'm happy with a 200 one. So it's good to hear that you guys actually educate as opposed to just approve and sign and stamp and pay the man at the end of the counter. So it's good that you guys are educating, going, okay, well, let's see what makes sense for you and your family, because again, everyone is different. So is there any little tips, hints, or anything like that that you want to, give out to anybody that's looking to apply for a loan or anything like that, what the process may be, or how they might want to get started if they wanted to contact you guys, obviously to ask you questions or whatever?
Yeah, so the biggest advice I can give to anyone is give me a call. It's as simple as that. Nowadays, there's a lot of false or misleading information all over Facebook, Instagram, Google. Just the advancement of technology has allowed everyone in the United States, if not the world, to post any kind of articles out there, which can be overwhelming. It can be confusing. There's a lot of bank jargon that may go over some people's heads. And so the best thing any individual wanting to know more about purchasing a home, or just trying to understand our processes, is to give me a call. We're not gonna beat you over the head until you fully understand every bit and piece of a mortgage loan. But we're here to really make sure you understand how to get that mortgage loan and how to leverage our knowledge and Service First Mortgage in general to really understand what you're about to get involved in. The biggest tip is to, like I said, just reach out, give me a call. It all starts with one call. But 2, do it in advance before you're needing to move. Because what I hear quite often is people will come to me and they'll say, Mark, we found a house we want to buy. We need a pre-qual letter right now this second, which is good if you qualify. However, it's a very, I guess the term I'm looking for is unpleasant when you find a house, you've been working with an agent for 2, 3, sometimes even months at a time right now. You've been looking at all these $300,000, $400,000 houses, but then when you apply for the mortgage, you don't quite fit the guidelines to purchase a $300,000 or $400,000 house.
Right.
And there's a big difference between that and, let's just say, a $200,000 house.
Oh yeah.
And so my best advice is, speak with a lender. If you don't have one, I would be honored to earn your business. But at the end of the day, speak with somebody within the mortgage world that can really help, one, educate you of everything that goes into a mortgage, but two, make sure you're on track to do things right the first time and not have to backtrack to do them a second time. Right. And so just a simple conversation, whether you're going to apply up front or not, just having the simple conversation with that mortgage banker will go a far way as far as preparing you for homeownership.
Right. I'm glad you mentioned the fact about speaking early, because you know me and the way I take to my clients and everything like that.
Oh, yeah.
As I'm speaking with them, one of the first conversations I'm having is, do you have a lender? Have you spoken with a lender? Are you pre-approved or pre-qualified, whichever stage they're in and everything. And then I explain the importance of having that happen. A lot of people, like you said, think that, I'm going to look at houses and then on the back end, I'm going to go ahead and get the loan and everything like that. The way today's market goes, if you're looking at a home, you need to have that information basically in hand. So and understand what you can afford, obviously, before you go and do it. I mean, because the last thing I want to do is waste your time as going and looking at homes that you can't afford or whatever. And then all of a sudden they go, give you a call and it comes back and says, no, it's not 350. It's like 225 or 275 or something like that. And now those are worlds apart from what you were looking at. So again, that disappointment of, oh man, we spent months looking at something we couldn't afford. But I do set my clients up for that. And you know that how I do business as far as that goes. Just to educate them and say, here's what we need to do first and foremost. We need to know everybody knows what they want, right? I want to live. I want to go here. I want to do this and everything like that. Well, let's see what you can afford or that you are comfortable with affording before we start diving into going and looking at things. Because I'd hate for you to go in and fall in love with a home and then come to find out that it's not going to happen because you can't afford it. Or on the flip side, you're looking at homes that you may go, well, we're going to search in this area because that's what we're comfortable with and everything like that, but it's not quite fitting the bill. And then when you go get the paperwork done, it's like, oh, well, we actually qualify for a little bit more. We can bump it up and we're comfortable with that. So again, that's where somebody like you guys come into play to where can help, educate those buyers before they even get to that point. Well, I think we're going to pretty much wrap up right now. Is there any last comments or anything like that you want to, put out there?
Not so much I have. The only thing I can say is that, when buying a house, it is an exciting and adrenaline rush moment to go through. And there are times where, to your point, you want to make sure you're fully qualified to purchase that house. So that way, when you do start the mortgage process, you don't have a last second hiccup. You don't have a last second, oh no, we still need to get these documents over to Mark. It's all about understanding who you're working with, but working with a mortgage lender who has, one, experience, but two, the knowledge to understand all of the products and services we have to offer. Because you're not going to put every single borrower or every single client into the same product. Some may qualify FHA, VA, conventional, USDA, A loans, but working with a mortgage lender who understands the differences and the pros and cons to each vehicle or each product out there can work wonders as far as getting you approved for maybe a bit more money, maybe a bit more house, maybe lower down payments, maybe 0% down payments. But having somebody who's knowledgeable in that aspect can work a bunch of angles that you may not fully understand now, but they can also benefit you down the road. And that's our goal. We analyze where you currently stand, and we're going to give you a vehicle to get you from point A, maybe your current house or a rental property, to point B, your new home that you're trying to move into.
Okay. Well, look, man, I certainly appreciate your time today. And like I mentioned to everybody, this is kind of just the beginning of our conversation. I mean, there's a lot of terms you kind of alluded to in there that go a lot deeper than what we have time to cover today. So my plan is to have you back on in, a few weeks or a month or so or something like that. And we'll
Okay.
start diving deeper into the loan process, the underwriting process, the interest rate points and things like that, all these bigger terms that encompass a loan process and everything like that. But right now, like I said, it was just one of those conversations that we can have everybody kind of get introduced to a lender, let them know where you guys are located at, how to contact you and things like that, and start the conversation. I think that's the biggest key right there, is for let people know that
Biggest key.
yeah, just pick up the phone and make the call and start the conversation. It doesn't mean you're tied into anything per se or anything like that. You just got questions, and that's kind of what we were here to do today, is to kind of just break the ice and let people know, just some surface level questions and answers and things like that. So everybody, appreciate you guys being here today, taking time out of your day to listen to us just kind of babble back and forth between each other, and hope you learned something. If you got questions, comments, concerns, feel free to hit me up, chat, send me a note or something like that down in the remarks and the comments and everything like that. Be sure to subscribe to the video. You can check out my webpage at homesbyhan.com. Again, like I said, Mark, appreciate you guys being here today.
Yeah, thank you.
I'm gonna put your contact information down below and everything like that. You guys make sure to look him up. By the way, if you look him up, he's called Mark, Dean of Loans. So that lets you know that he has the knowledge behind him right there. He has that doctoral,
Yes, sir.
Yeah,
I'm not just a lender. I am the Dean of Loans.
There you go. See, that right there was worth the price that he paid for this interview. So again, you guys, thanks for joining me. Be sure to, like the channel, subscribe to the channel and everything like that, so you can be sure to get all these tips and hints when I go live and everything like that. And Mark, again, appreciate you being here, brother.
Yeah, thank you.
And we'll talk soon, man. Bye.
Awesome. See ya.